Tarun, what do you expect to see on the rate-sensitive sectors? Because they have led the market on the way down, the banks particularly. How would you position yourself there?
Oh, God, that's a tough one. Obviously, the pressure has been on the bank stocks, pressure has been on NBFCs. But I think if they get aggressive over the next 2 or 3 months with rate hikes, I think, and if the sense is that actually rate hikes have peaked, then I think you start to see a rally in the banking sector and the NBFC sector. So we need to wait, I think, for the next 2-3 months before you see any material move up. The flip side, obviously, you're seeing some of that move up happen in the last couple of days with some of the smaller private bank stocks. But that was really driven by a massive sell-off, as we've seen over the last 2-3 months. So I think you really need to wait for, hopefully, the interest rate move up cycle to sort of peak before you see a material move up in financial stocks.
How's the medium term plotted for the market then, Tarun? In that, do you think the worst in terms of price damage was done in the very early part of January, or do you think we might see more by way of correction?
I'd like to think the worst is behind us. Obviously, you've had the scare of inflation, which I think is a big one. You've had sort of this whole thing with what's happening with the scams now. Assuming that we don't have some more of that to come, I think probably the worst is behind us. That doesn't mean, however, that you're going to see, at least in my opinion, a material move up in the indices, because I think the economy will see the impact of high interest rates. Obviously, there will be a pressure on earnings by high input prices. We've seen where oil is at the moment. And I think the other fly in the ointment that I certainly am watching for today is, I think over the next couple of quarters, as the U.S. economy sort of starts to achieve momentum in terms of growth, and that sort of sticks, the key risk thereafter is how does the U.S. react? Do they start to withdraw liquidity, let's say in Q3 or Q4 of this year? If they start to withdraw liquidity and they don't signal it accurately or correctly or with sufficient notice, I think that will induce a lot of volatility in the U.S. markets and therefore in the global markets, because remember, putting liquidity into a system obviously is extremely easy. Taking it out, to get the balance right between, too fast or too slow. If it's too slow, it's inflationary. If it's too fast, you sort of kill a nascent recovery. That, to me, will induce volatility in the second or the last quarter of this year. So this is not going to be a banner year that we saw in 2009 and certainly, some part of 2010. This will be a tough year.
I believe you like the IT services as a space, so any thoughts on Wipro?
It's probably more a question from an IT analyst, but generally we're bullish on the sector. Obviously, we've got one that we play against the other, or one we like more than the other. But generally, we are. My research guys are bullish. The IT sector, yes.
5705 on the Nifty now, so we are flattening out. There's and even the mid-cap index is up only 0.33% now. No great momentum visible, at least for starters. If a short covering rally has to play out, it's certainly not commenced this morning. From the look of it, though, State Bank of India has done well, and a couple of banks around it have not done too badly. A couple of real estate names, also like HDI, have not started the day too badly either, so keep an eye on that one. Tarun, what do you expect on the FII flow front? Because we've seen $1 billion go out at the start of the year. Do you see that intensifying, or do you think whatever weaker hand selling out has had to happen, much of it has happened already?
No, I think as I said on the show maybe 3 months ago, 2011 will be a year where you won't see the 25 or the $29 billion that we saw last year. I'd like to think it won't be a net negative, but I think, if it's half that, you would have done well. I think there is a palatable sense in the FI community that things are not right, and you go back to the governance issues, you go back to inflationary issues, then of course there's a sense that, gee, if the US is recovering, should some of that money that was emerging markets directed needs to go back. So I think there will be, and that of course induces volatility, which goes back to my original point. This is going to be a tricky year. The FIs are very concerned about this, and frankly, there are alternative uses of capital in other parts of the world which start to recover, the US being one of them.
Expected pressure on Leyland though, then?
Yeah, I'm just wondering how much of it has got priced in already, because the stock's down to 56. It's now in the lower quartile of its price movement, because Leland typically, since it started delivering good numbers, it generally trends to bottom out around the 50. In panics, it goes down to 46, 47 kind of levels. So I think it's probably within the last 10% of its fall, poor numbers notwithstanding. Because it's not expensive, now after today's fall, it's probably trading at close to 9 times next year's earnings. It has a dividend yield of between 4 and 5%, 4.5% dividend yield. So, I don't think there's a whole lot of downside. It's from the valuation or a fundamental point of view. Mood and sentiment, of course, is another thing altogether till this interest rate scare plays out. But, we were discussing banks last week, and I think even autos will probably get to that level over the next, through this quarter, where you'll probably find very attractive levels to accumulate some of the good performing ones. I'm not saying 55, 56 is the bottom for Leland, but I think it's getting to the last 10% of its price performance.
Okay, let's take a break on that note with the news that the market is flat, but it's the rate sensitives that are supporting trade today. We'll be back. First brief slip into the red for the Sensex, and then it's recovered, so still almost flat for it. SPI remains the biggest gainer. A couple of metal stocks are actually dragging at the lower end, and even Reliance is not doing too much this morning. If anything, the stock is sluggish. Here is small caps in trade so far.
Vidali, it's about a 0.5% opening for the small cap index in terms